This is our Forex blog for February 7th, 2013, and this is our currency index along with the currency meter on the bottom. This is the dollar. It compares the dollar to every other pair, and I actually create an index, kind of like the Dow Jones, NASDAQ, S&P 500, comparing the dollar to every other one. And then our statistical tools on the bottom that show how intense each of the moves are. And what I found is there's certain events that can take place that oftentimes lead to big moves. For instance, going from below to above the previous day's high. Oftentimes that's a trend that's going to continue. Going from below to above the hourly moving average in gray oftentimes is a trend that's going to continue. Any kind of support area like the point of control in the middle, this is where most traders across all dollar pairs have positions yesterday. So when it's above that, most traders are long the dollar. Underneath it, they're short the dollar. When it broke back above here, people were buying the dollar heavily, and sometimes you can get into trades a little sooner than the hourly moving average breakout, and of course even sooner, an hour sooner than the previous day's high breakout. But these are events that oftentimes lead to, when you find a weak currency, 25 to 50 pip moves, which is probably more than most traders would be happy with. I'm happy with 10 to 15 pip move, because 10 pips per day, if you do the math using our built-in trade analyzer planner, doubles your account balance every 2 months using small 1 or 2% risk per trade. So let me just point out some of these events for the dollar here, and then we'll look at the actual currencies together. A little bit before 8, or a little bit after 8 a.m. Hourly moving average break. I'll just tap this. We'll start with this as a new blog format. 9 a.m. Breakout of yesterday's high. Now, this index looks at what it did yesterday, and you can see that this is yesterday's high. And our zoom function also now works. When you wait a second after you zoom in, it will index the chart. So let's look at some of the pairs that we would be trading the dollar against. Here's the euro, and you can see, first starting the day off, it's above the hourly, above the 15-minute moving average. It goes weak at about 8:30, 8:15 to 8:30. There's also some patterns I've found that are wonderful, like when the market has a false breakout above the previous day's high and fails, and oftentimes we'll try to get above it and can't. That's a pretty decent place to sell, as is this. And you can also obviously draw trend lines on the chart. When trend lines get hit multiple times and then get broken, you oftentimes can get into trends 5 to 30 minutes and sometimes an hour and a half earlier than using some of the other methods. We're just going to go through all the different pairs and look at them. Here's the pound. Just want to point out that at 5 a.m. Now, if you're watching this, this is a 5-minute bar, but at some point early in that 5-minute bar, it broke the previous day's high, and it was pretty much sitting above the hourly moving average all day. So there was really no selling in the pound. And anytime you see a currency that's trend is up, finds support, finds support, finds support, and then breaks out, it's much more likely to go up, because there was no selling since it went from below to above the hourly right here for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, half of a day with zero selling. No selling to make it go and stay underneath the hourly. That's very significant. And there was obviously a false breakout here at 3 a.m. I just want to highlight all the different pairs. The Swiss pretty much is very similar to the euro, but not quite. It broke from below to above its previous day's high, comes down, finds support, comes down, finds support for about 20 minutes, and then breaks down. And it also happened to be the hourly moving average. So we'll just put this on here at 8:30. Broke from above to below the high and hourly moving average. Okay? And I'm just showing you how I trade with this so that you can look at it as well. CAD, this is a kind of pattern. I don't trade the CAD pairs that often, but you can find chart-based patterns on this that oftentimes lead to moves. So with pairs like the CAD and oftentimes the Australian and New Zealand, you probably want to look for some kind of chart-based move or multiple trend line touches and breaks just to avoid being chopped up. A lot of these CAD pairs, and a lot of the pairs can be very choppy and with higher spreads. But you can see about 130 wedge breakout. Now with our older tools for the last 6-7 years, we've had many different statistical models that compare all the CAD pairs to every other one. You can't do chart patterns, you can't see previous days high and low breakouts, hourly breakouts, and so on from any of our past statistical trend tools and any of the new ones. So that's one of the huge benefits of this. One pattern that I like is anytime a currency is in a kind of a tight range. I prefer about 10, 15, 20 points on my index. So you can see 35 to 25. This is a 10-point index right here. When it breaks out right here at 9, that's very likely buy. Especially the fact that it stayed above the hourly most of the day, or at least above the point of control of yesterday, earlier before the breakout. So there was really little selling in the Australian, which that breakout, and that was at 8:45. Breakout up. That's enough to start our analysis now. So I'm going to just bring up a regular chart and show you how easy trading with this can be. We'll start with the euro dollar. And look at the notes that we took. At 8 a.m., the hourly moving average broke out, and then at 9 a.m. it broke out the previous day's high. The euro was strong earlier, but goes weak between 8:15 and 8:30. So at 8 a.m., the hourly of the dollar got really strong, and then somewhere between 8:15 and 8:30, and jot down the exact bars time, the euro got super weak. So one of them was getting stronger, the other one was getting weak, and it doesn't take a. And remember, 8 a.m. is when the dollar started getting strong. That's right here, and so you can see if you had a trend line, kind of going up, you could almost see that trend line sort of getting broke a little bit before 8. The fact that the dollar is going strong at 8. If you were in this trade right around 8, notice the dollar staying above the hourly right here. It's not really going up. You can see statistical strength here. The weekly and monthly trend are up. The daily trend is still slightly down here, but you can see it went from being strongly down to very little down. So, and then it just kind of inches its way up. You can pretty much stay in this trade as long as the euro is doing the exact opposite until this trend line gets broken. You see that? This allows very easy and confidence in staying in long trend moves. I mean, these kind of moves don't happen multiple times per day in every currency index, but they do happen many times per week per currency. And you can see that broke that trend line a little bit after 12. If we look at this chart here, a little bit after 12 is, that would have been a pretty decent exit down here at 3,400. You're in this trade at 35.50 for 150 pips. Now, pound, 5 a.m., huge move. Let's go look at the pound again. Right? Exploded up. So when you see a currency getting super strong like that, you want to trade it against one that's weak. So let's go find one that was weak right at 5 o'clock, or at least underneath its hourly. This one was above its hourly, so you went and traded against the CAD. At 5, this one had just kind of broke from below to above the hourly, so you probably wouldn't do this one either. At 5, this one had previously came down, came back up to the 15-minute moving average and kind of stalled. The only downside of this trade is it's stuck between the 15-minute moving average here and the point of control. So it's stuck in a resistance zone where there's likely to be a lot of buying and selling. But nonetheless, it's certainly not a strong currency, and the previous move down was pretty intense. So let's trade the pound, which is going up, against the Australian, which is pretty much sideways. Remember, you don't have to always have one currency exploding up and one going down to make 30 to 50 pips. One currency exploding with another currency showing no buying or selling can still give you a tremendous move. So here's the pound Australian, and remember at 5 a.m. is what we're looking to buy here. And if you're looking at this chart, you might have got into it when it broke this level, the previous swing high here at 5,200. Guess what? It went up to 5,260. In 10 minutes, it went up 60 pips. So like I said, even though the index of this one is not exploding down, you could, if you got into this trade and you saw this going sideways, you stick with it. As long as the pound index is going up, you stick with it. Now let's find one other example. This one obviously is clearly weaker than the Australian because it was underneath its hourly all day. And at 5 a.m. it had tried to break down underneath the low. It's oftentimes these lows get hit, they kind of bounce up, and then they break it later in the day, which this one did, and it did again. So this would have been a much better one to be buying the pound against. And I would bet, without even looking at the chart or having seen the chart earlier, the pound New Zealand went up more than 60 pips. So this one has a much nicer, smaller rectangle pattern right here. And it broke out at 87.50, went up 25, 50, 75, 100 pips. So I was right, went up 100 pips. About 2/3 bigger move up than the other one because the chart clearly showed this is one of the weaker ones. And so that's how you use this index. It's pretty much dummy proof. I don't know how anybody could possibly mess this up. So let's look at the rest of our examples here. The Swiss 830 broke from above to below the high and the hourly. So let's take a look at the Swiss again. This one trended up, never hit our upper containment band, so it was never extremely strong. And then it came down, and you have a nice little kind of multi-hour, very tight range. Remember, 10 points on my index is a very tight range. It's stuck inside there, and it broke below this tight little rectangle area's low, broke from above to below the previous day's high, broke the hourly moving average, and on the way back up here, it couldn't get above the 15-minute moving average of the index. So very high probability right here when it finally breaks at 835. Now remember, the dollar was going up, so more than likely you would be looking to buy the dollar Swiss. Remember, the dollar got strong at 8, but let's say you waited to buy the dollar Swiss until 835. So here's probably 835. Let's click the bar. Now this is 835 bar right here. What if you waited right there to buy it? Obviously it's been going up pretty much since 8, but it's only up about 15 pips. Well, guess what? It goes up from 91.04 all the way up here, 96 pips. Now, obviously no one's going to catch all those, but even if you got it right here, you made 20-25 pips in less than a half an hour. Alright, so let's look at here, the CAD wedge breakout up. Now at 1:30 we have to kind of find which currencies are already up. This one at 1:30 is going above its 15-minute average to below. Actually, that's not weak enough for me to really consider. Yeah, this one is a pretty decent one. It's been trending down all day. So remember, the CAD got strong at 1:30, broke out of this little wedge pattern, and the New Zealand's the weakest. So that means we want to sell the New Zealand CAD at around 1:30. Here's 1:30. You know, I always kind of wait for the low to get broken. In this case, actually, let's click on that bar. Yeah, so here's that bar right here, 8:30. You might have gone short, had a small loss, went up a little bit more. You got short again right here at 83.067 and came down to, yeah, so that's a pretty decent sized move. You have a small, less than 10 pip loss, and then you make 60, 70 pips on that trade. And of course, the Australian 845 breakout up. Right here. We already knew that New Zealand is the weakest, right? So we're going to buy the Australian New Zealand at 845. Here's 845. Here's the 845. You really kind of want to wait for the next bar to go above this bar's high. It didn't. Maybe you would have got into this trade a little bit later, about an hour later. Put your stop underneath, you know, the previous bar or the 2 bars against low. And this one is probably the worst of all the trades all day. But even if you got into this trade, think about how much anxiety most people have in the average trade. Kind of went their way, it only pulled back 5, 6, 7, 10, less than 10 pips against them, and then proceeded to go up 5, 10, 15, 20, 25 pips. So obviously it's not that much of a stressful trade. The worst trade of the day using this event-based trading was still very relatively low stress. And also, as you probably have already noticed and done the math in your head, every one of these event-based trades worked 100%.